This chart here tracks one of the most important fundamental forces for Ethereum. It shows us the total number of new Ethereum coins coming into the market, minus the total number of Ethereums being burnt off the system. When it drops below zero, it means more Ethereum is being burned than created, shrinking the total supply. And when it rises above zero, it indicates that new Ethereum tokens are being added faster than they are being burned, causing the total supply to expand. This is the most influential force on Ethereum's price, since it actually shows us what Ethereum's supply is doing in real time. And it has predicted some of the most important moves of the last 3 years. Take this period from October 2022 to March 2024, for example. Ethereum went through sustained deflation, meaning more Ethereum was being burned than added into circulation. Look at what happened to the price of Ethereum as supply was shrinking. It rallied from around $1,100 to nearly $4,000. So a 260% move in just a year and a half. And as soon as this deflationary trend began to fade, Ethereum's price peaked and fell by 65% in the following year. Right now, we're seeing a record amount of new Ethereum tokens entering circulation, and that is with Ethereum's price trading near record highs. This dynamic could act as a major headwind for potential downside on Ethereum as it weighs down on demand. You see, the Ethereum ecosystem is shaped by two key forces, issuance and burning. On the issuance side, new Ethereum tokens come into circulation through a process called staking. This is when holders lock up their Ethereum to help secure the network, and in return earn rewards, similar to earning interest in a savings account. And on the burning side, a portion of every transaction fee paid in the Ethereum token is permanently removed from supply. This burn mechanism was introduced in August 2021 with the London hard fork upgrade. Since then, over 4.6 million Ethereum have been burned. The goal here is to try and create a deflationary pressure on supply, which in theory should increase the value of the remaining tokens over time. In reality, when demand is high enough, more tokens are burned than issued, thus reducing supply. And when usage slows, issuance outweighs burning and supply begins to expand. So, whether Ethereum's supply is inflationary or deflationary at any given time ultimately comes down to the number of tokens issued through staking and the number of tokens burned through actual network usage. First, let's focus on the supply side by looking at the tokens being issued. This line shows the percentage of Ethereum that is staked, so the tokens that are earning staking rewards, which are basically added as new supply. The share of total staked supply has climbed from around 15% in mid-2023 to nearly 30% today, but the bulk of that increase had already taken place by July 2025. Since then, the percentage has held steady, telling us that the amount of Ethereum locked in staking has barely changed over the past 3 months. That also means the rate of new token issuance tied to these staked tokens has also remained largely constant. So, from a supply standpoint, there isn't much risk of issuance suddenly accelerating from here, at least for now. But on the demand side, a major development has unfolded that could prove to be a turning point. By the way, we're celebrating our 5th birthday at Bravos Research. Our mission has been to provide investors with clear, data-driven research that cuts through the noise. And the truth is, we wouldn't be here without the support of all of you who watch these videos and follow our work. To celebrate, we're offering a special discount on our service. If you've been thinking about joining, this is your chance to get full access to every trade we take in real time, and our complete trading strategy for navigating the crypto markets, step by step. We don't do such discounts often, so make sure to capitalize on it. This chart shows us the total value of stablecoin transactions. Back in 2020, transaction volumes were just around $1 trillion. To put that in context, Visa had done $9 trillion in the same year. By 2022, stablecoins had already crossed $8 trillion in annual transactions, rapidly closing in on Visa's $11.5 trillion. Fast forward to 2024, and stablecoins actually overtook Visa, processing over $13.5 trillion versus Visa's $13 trillion. And in just the first quarter of 2025 alone, stablecoins cleared more than $6 trillion in transactions, almost double of Visa's $3.3 trillion over the same period. That's a remarkable shift, given Visa's decades-long dominance in global payments. Much of this growth has been driven by something called the Genius Act, which is the first regulatory framework to set clear rules for how US dollar-backed stablecoins like USDC can operate. This has opened the door to regulated institutional adoption for stablecoins, a shift that could have a significant impact on Ethereum's network usage. 54% of all stablecoin supply is currently on Ethereum. That makes Ethereum the largest primary infrastructure layer for the stablecoin economy. And so it stands to benefit the most from the increased use of stablecoins. In fact, we're already starting to see stablecoin activity ramp up on the Ethereum network. This chart breaks down the different types of transactions taking place on Ethereum. They include categories like token transfers, NFT transfers, decentralized finance-related activity, and of course, stablecoin transfers. Now, if we zoom in on the stablecoin portion, it currently makes up 34% of all transactions. In other words, over 1/3 of Ethereum's transaction volume over the past quarter has been driven purely by stablecoins, making it the single largest component of Ethereum's network activity today. This ties back directly to this chart of Ethereum's supply and demand dynamics. Because more transactions on the network means more fees being burned. That reduces the amount of total new Ethereum entering into circulation and lowers the overall inflation rate of supply. If we zoom in a little, we can see that Ethereum's net supply change has already started to flatline and roll over a little, meaning while new token issuances are stable, the number of Ethereum tokens being burnt are increasing. If network activity continues to ramp up, we think that this trend is likely to persist and could even flip Ethereum back into deflation. That kind of shift has historically been a strong tailwind for Ethereum's price, since it mechanically creates scarcity, and we're already starting to see signs of that increased activity show up on the Ethereum network. In the past few weeks, Ethereum transactions have surged to their highest levels since the network was created. This is one of the clearest signals that real usage is picking up, which is fundamentally important for the number of Ethereum tokens being burned to increase. What's notable is that this rise began right here, around the time the Genius Act was introduced, suggesting that regulatory clarity may already be unlocking new demand. The last two times we witnessed a sustained rise in Ethereum transactions were in 2017 and in 2021. If we look at what happened during those prior cycles, Ethereum rallied strongly each time and went on to set new all-time highs. Now, that historical pattern doesn't guarantee the same outcome today, but it does show us how closely usage growth has lined up with major bull runs. We've already seen Ethereum show impressive strength off its April 2025 bottom that we were able to convert into one of our most profitable crypto stretches of the year, with members getting real-time alerts across Ethereum and select altcoins that delivered double-digit returns across the board, while keeping our losses limited to only about 5%. Our trading strategy is simple. Let our winners win big and cut our losers before they turn big. Today, with Ethereum's network usage continuing to expand rapidly, especially as stablecoins fuel more transactions, it's likely that Ethereum's inflation rate should continue declining from here. That's why we believe that a breakout to new all-time highs for Ethereum is a real possibility in 2025. You can view our entire track record for free on our homepage, and make sure to lock in your discount before the offer expires. We take our members through our exact crypto trading strategy, step by step, on the private videos that we post on our website and share with you every single one of our trades in real time. If you're interested, you can click on the link down below and join our crypto community.